Hello everybody, welcome to this daily and intraday review. Today is February the 12th, 2018. I'm Giuseppe Basiri, also known as the FibStalker, and I welcome you to this video, which is part of the FibStalker analysis and trading service. As usual, please read and accept the usual disclaimer. Trading Forex carries a high level of risk and may not be suitable for all investors. If you've never read and accepted this brief risk disclaimer, please do it now. Pause this video and read it and accept it. Thank you. All right, so let's get into the markets here, and I'm going to start from the SP 500. We're seeing that bounce, as we mentioned, would actually happen here. So SP 500, there seems to be quite an agreement on the fact that what we're seeing here, it's not the start of a move lower, but rather the start of another bounce higher here, and some people are even invoking for intermediate term low. What it's likely, based on my statistics and information I have, is for this market to continue higher in the coming weeks and retest at least that previous high. So that's where the target for this long is at the moment. It's around 28.75. Okay, so we're gonna hit resistance 27.03 here eventually, and we're gonna get some initial resistance at that level, so this market could come back down. I'm not sure that I don't believe that this market will come and retest the lows. Actually, this market, what it could do, it could actually test the 50% from lows to highs here if we get a bounce. Okay, so this will still be a long if the market does this, and actually this area here would be an opportunity of 50% to add to longs, and again the target is 28.70 area. All right, dollar index, we are seeing that continuation of the move lower here. So 90.17 could really be it. We will wait for this extension long 89.80 to trade here. That's the extension highs to the latest highs we had. So let me remove the other levels here for just for a moment. Okay, and here what we see on the daily here is an extension long from highs to new highs, and that's at 989.30. Now the equivalent extension has failed, as I'm going to show you in a minute, on the Singapore dollar, US dollar, Singapore dollar. Okay, and that might also mean that the same is going to follow for this market. If that happens, obviously the possibility that this is the high is much higher. This market has also given a free risk trade here as it has moved lower. So at the moment it's pointing lower. And gold and silver in a way are confirming that view. Gold here, as you can see, has bounced from this extension, and now it has targets above. So it is suggesting that the dollar index is in trouble and might continue lower. And actually the dollar index, we know the dollar is in trouble because the Fed is now realizing that they have to borrow 1 trillion a year only to pay back the debt. So it's like borrowing from the Feds, borrowing from the Japanese, borrowing from the Chinese, the usual suspects that are actually lending to the United States of America. So now what gold is suggesting here is a bounce and a continuation higher. That's what we are seeing here. It's an extension long. It has a first target at previous the first target is here at 1391. The second target is previous highs, above previous highs, 1429. Okay, so this level is holding, and this could continue higher. Okay, there is an opposing measure move here. That's the one that we mentioned yesterday. We got a little bit of a reaction today, but the market is back there to the level. Second test are dangerous tests, and we could see this market moving higher. All right, so Next, silver, that is basically behaving the same way as I mentioned. Silver, it's a bit weaker than gold, but it's moving actually along with gold, as we can see here. Okay, so the 1655 is now under pressure, and this is going to likely going to fail here. The second test, and the market is already trading above that levels. Yeah, the Friday's Monday's level here, and lows to highs to lows here falls at 1692, and this market could actually get that. Let's look at the majors. What's happening in this market? The Australian dollar, US dollar, we have to be very careful here because this market has traded and continues to trade a larger time frame. So although this level here that I indicated yesterday, 90 079 and 072 079.16 are areas of resistance, it could be possible that this market just bounces off of them and then breaks them. Okay, and the reason is this area has held and has also offered a risk-free trade. Okay, so this market could continue higher. We know there is a setup, and the setup that we have been using is an extension long here that found participation. It's a dirty setup, a found participation, and we know that this has targets above, and the first target would be the 83.75. We also have always to remember that there are counter trend moves, and if you remember how we in the past we modeled this trend here, it was 50% here that brought price into first and second target, and therefore we used the next measure move here, which as we know has failed. Okay, so now where this market can go, we have to use the full 50%, the lows to the highs to lows here. Okay, so there is still a lot of room available here before the larger time frames will show up. So my best guess, if I had to guess, in this market would be a test of this area of resistance between 079 and 079.16. A test of this area, maybe a move lower and then a continuation higher. And to capture that move lower could be either an extension, a full 50% retrace. We don't know, right? It could be very deep here, but still keep supporting prices. Euro dollar is moving accordingly, is bouncing, as we can see here from the chart, is bouncing higher, and it's now testing that extension short. Same considerations here hold for this market, although this market has failed the extension long. There may be something else that is still supporting this price. And in any case, if the dollar index is going to move lower, the 63% of the dollar index is really euro, which means that if the index goes down, the euro can only go up. So we are going to consider also this 122.24 level here, and so far these areas have held. If we are in a reversal of the dollar index, we'll need to wait for the next measure move for a safer low risk position. Okay, so 122.24 is something to watch. As traded already, and it has broken the sequence here on the 4-hour time frame. So that level is real and is getting traction, and we will see now if the 50% short will come and slow down this price here. But if the dollar index continues lower, the euro will surely continue higher, and here the pound is a little bit weaker than the euro. As we can see, while the euro has put 3 days higher, the pound is not that strong, and we have a projection here on the downside, or actually we should say a level where the weekly the weeklies will come into play, and that's the 1337, and the 50% short here as a first target is 136.95, 137. The 50% short is not traded, so that might be the level where this market is moving. This market is not as strong as the euro, and despite a weaker dollar, this market is actually under a lot of pressure. Doesn't mean that it cannot reverse. And again, as we did for the euro, we are going to look for potential levels of bouncing if the dollar index continues lower. The US dollar Canadian dollar is not really that extension long yet. That that move would make a lot of sense, considering also that the dollar index is weaker. This market has pierced the opposing 50%, as we mentioned at the beginning of the week in our video. That was the 126.64 level. That's an important development, because now this market is in a range, and actually could reach the upper part of the range. Now we need to see how this market behaves with a weaker dollar index, but you can see that even with a weaker dollar index, this market is really after Thursday last week is actually moving very, very slowly. Still, you can test this level, and if this market is continuing higher, this level is going to be a successful test, and this could be an opportunity for a long. Okay, US dollar Swiss franc, with a weaker dollar, this market is also weakening, and it could retest that 93.59. that is the 94.70 that has traded. And when we look at the 4-hour time frame here, we also know that on Friday the 50% short has traded here. Okay, so on the smaller time frame there is a push lower for a retest of that level 93.59. As you can see, the current target of the 4-hour short would bring price well below that level. Okay, so I'm trying to say here is that the as you can see here, 93.19 would also be below the 50%. So there is a short now in play on the 4-hour time frame that could actually invalidate the long that has traded the 93.59. Okay, so there is very little to do here. They are still transitioning, and of course you can still take the short on the 4-hour time frame for a test of the 93.59. Okay, the point is there's not really a lot of room there before we encounter this level. So this kind of trade would be at this stage a little bit risky. US Japanese yen is really letting it go, and that confirms the strength that we are seeing in the Japanese yen. Again, in this market we saw a change in the humor, the way this market has been trading, and it was very technical. There was a break, the 50% longest traded, and then the 113.46 started trading again, and that has basically, it's like within this set of bars here, there was a change in the character of this market, and that also possibly led to that correction that we've seen on the euro dollar, or a consequence of that. Okay, so it doesn't matter what's the reason, we look at price because we don't know all the reasons, and to be honest, they're not required. That's not the reason we trade. We trade because we see participation in price, not because someone is telling us a story about what the price should do. The price can do anything. That's a fundamental truth of trading. Okay, so the 110.38 is trading now, and this is gonna push at this point prices into 107.30, and then we will see whether this market is going to continue, in which case, we're gonna capture a bounce as an extension. And so there are going to be opportunity in this market, which is very, very technical. So I'm not overly worried if this market continues lower into 105. Yes, it's 300 pips, but we don't chase markets, right? We trade in when we have a good opportunity for a low risk trade. And if this market moves into 105.70, all these areas will also be invalidated, and then we know that now we can get into 160 and 70, and that would be very good news, because then any bounce would be a very good opportunity to trade. And we always get bounce somehow, either on the daily or on the 4-hour time frame. Okay, so nothing is lost there. I'm not at a loss. I don't feel I'm at a loss with the market. My view of the New Zealand dollar is shifting and becoming similar to what we saw on the Australian dollar, US dollar. As you can see, this first level is under pressure. It attempted, it held actually yesterday, but then today, as we can see, we are seeing this market piercing into this level. So what I'm gonna do when that happens, I'm gonna change the level here, and I'm gonna use different color codes, and this area is now under pressure, and the market can definitely go into the next area level 72, 98, 73 area. Okay, so that area could offer a first bounce, and then if this market continues higher, then there would be an opportunity to trade either an extension long if the bounce is very limited, or a 50% long. So we need to leave these markets move. We are not in a rush to get involved, because if this is a change in direction, and if the dollar index has found its bottom, then this is going to continue higher, and we'll have multiple opportunities to participate. All right, so I'm not at a loss, I'm not worried. And last, this is the US dollar Singapore dollar that I mentioned before. The dollar index has not yet tested that extension long, which would be the equivalent of what you see here, but the Singapore dollar has pierced that level already. Okay, so which means that this market is showing weakness. Yes, it could bounce again, but there might likely be an opportunity for a short here. So now the next level I want to look at, and if you are uncertain about this anchor, you can always think as the next measure move after this failed trend, and even that has failed, so there's no hope for this trend. The trend higher here has failed multiple times, and there is no hope for this. So we know that this market is likely, very probably, going to retest at least 131.73. Okay, and we will see then there if there is anybody that shows up at this level and reverses this level. But this market could also do something like this, reversing and printing a lower low and then continuing lower. Okay, so that's a possibility. Whether it happens on top of this 131.73, or it happens after the 61% level has been pierced, we don't know, but it doesn't matter really. If this level pierces, then any double top formation or similar would be an opportunity to sell this market. Okay, so this is it for this daily and intraday analysis for today, February 12th. Tomorrow morning I'm going to look at the other markets for another intraday analysis. So we're going to get some good trading ideas also in all the other markets, and I will publish the Excel with all the levels. I want to thank you and have a good night and see you tomorrow. Bye bye now.